President Trump's trip to Asia, what you need to know. The tax reduction bill, why you should care about the outcome. And with 92% of the third quarter earnings reported, what's the score? Should you be concerned? Caution, what's in your portfolio? Here's what's moving the markets and your money. I'm Charles Brown. It's Wednesday, November 15th, and this is CB3 on 3. 3 on 3 covers current social and political, news and fundamentals, and technical analysis influences on market behavior and your money. Together, these influences determine the movements in all the portfolios we manage. Here's what we're seeing this week. In social and political events, President Trump's recent Asia trip took him to Japan, South Korea, China, Vietnam, and the Philippines. Japan's Prime Minister Abe avoided Trump's urging on a new bilateral trade deal. In South Korea, most of Trump's time was spent discussing the threat to freedom posed by North Korea's nuclear program. In China, President Trump was treated to extensive pomp with trips to the opera and the Forbidden City. The White House subsequently announced at least $300 billion in new trade deals between the U.S. and China. So what's my take on this trip? Clearly, the Trump administration prefers bilateral over multilateral trade deals. Bilateral agreements are trade deals solely between the U.S. and its specific trade partner country. It's my opinion as your portfolio manager that bilateral agreements are better for the stock market and thus your money. Because there are only two parties, the United States has more leverage in a bilateral negotiation with only one other country. The United States is not reduced to the lowest common denominator as it is with a multi-country agreement, and it is easier to withdraw from a bilateral agreement if it no longer benefits U.S. exporters. To see continued growth in our portfolios and increase in bilateral agreements could well benefit your investments in 2018. So why do most other countries want multilateral agreements? Well, in 2015, the percentage of U.S. exports of GDP amounted to a mere 12.5% of our U.S. GDP. Just look at this chart. Exports haven't even been 20% of our economy since 1990. For many European and Asian nations, their exports as a percentage of their GDP is 20 or 25%, or even as much as 50% of their total economy. Therefore, they need exports, and thus non-U.S. countries should have less clout in this negotiating process. But that's their problem and not ours. As your portfolio manager, we at CB3 will continue to watch these international trade developments because they can and do affect U.S. stock market valuations, which then trickle down to your stock holdings. In news and fundamentals events, the Senate Tax Writing Committee hammered out the details of its tax cut proposal yesterday, while the House may vote on its bill as soon as Thursday. Senate Finance Chairman Orrin Hatch released his modified tax proposal late Tuesday that would make middle-class tax breaks and other provisions temporary in a bid to comply with the Senate's rigid fiscal rules. The measure would also repeal the Obamacare requirement that individuals must buy health coverage. This repeal, if successful, is seen as a significant boost to consumers who can now redirect those mandated Obamacare premiums to their family's discretionary income, which would help at least some of our portfolio holdings. We are watching this developing congressional vote and its aftermath for you this week, and we'll have more on this next week. With 92% of the third quarter S&P 500 earnings reported, what's the score? Should you be concerned? Materials and technology are the clear winners to date. In fact, 89% of the infotech sector stocks have beaten earnings to the upside. There's a lot of data here, so I'm going to take this full screen for you. What's my take? Despite the almost 2% intraday pullback the market has experienced since my last week's episode, the S&P 500 has clearly beaten the third quarter earnings projection. If Congress can clear a yes vote on tax reform, we expect a strong stock market through the end of 2017. Thus, these strong third quarter earnings add to the floor on market pricing heading into the holidays, in our opinion. In technical analysis, the world's stock markets continue to rotate further in the direction I discussed last week. When I remove the clutter of international markets on this chart and just focus on the U.S. markets, you can clearly see that the Dow, Russell, and S&P are continuing to move northward on the compass in the fourth quarter of 2017. And that's what we want to see. The Dow is firmly heading higher in the green or leading quadrant. The Russell 2000 small cap and the S&P 500 are moving due north in the blue or improving quadrant. Plus, we're in mid-November and heading into December, which are seasonally very strong performance months for the stock market. The question we at CB3 continue to monitor and ask for your benefit is this: will S&P earnings continue to improve enough to support these traditionally high stock market valuations? As we are now another week closer to the end of 2017, our answer remains a solid yes. And that's CB3 on 3 for Wednesday, November 15th. What's in your portfolio? If you don't know, you should. If you want to know, we can help. I'm Charles Brown, and at CB3 Financial Group, we don't just manage your assets, we become one of them.